You place a bet, beat the odds, and collect your payout. But before you can even spend it, the IRS is waiting to take a substantial cut of those winnings. By default, sports betting and casino payouts are classified as fully taxable income. It is a liability that drains bank accounts every spring. But there is a legal mechanism to counter this. By systematically tracking and applying your gambling losses, you can offset your wins and reduce the taxable portion of that income by up to 90%. The engine of this strategy is a simple cost-versus-payout ledger. This diagram shows what happens to a standard payout. If you win $100, the default IRS assumption is that the entire solid block of $100 is subject to standard income tax. But the tax code allows you to bring your accumulated betting losses into the equation. Look at the second column appearing next to your winnings, representing the money you spend on unsuccessful bets. When we subtract the total cost of your losing bets from your total payouts, the math changes completely. If you lost as much as you won over the year, that taxable zone shrinks down to a mere 10% of the original amount. You are now only taxed on $10 instead of $100. The single biggest reason bettors fail to claim this deduction is psychological. When a bet loses, the immediate instinct is to throw the physical ticket in the trash and walk away. You need to break that habit immediately. Every single losing ticket is an active financial asset. It acts as a direct tax voucher. Tossing it out means you are voluntarily paying taxes you do not actually owe. To capture those vouchers, we will set up a dual capture system, starting with physical receipts. You need an immediate, localized drop zone. Take the blank folder you gathered earlier and write gambling receipts across the front, along with the current tax year. The rule for this folder is absolute. The moment an event ends and a physical ticket becomes a loss, it goes directly into this folder. For online betting, do not assume your sportsbook app will generate a perfect, compliant data report for you at the end of the year. Data disappears and formats change. Instead, open your smartphone's photo gallery right now. Create a new album dedicated exclusively to betting, and take a screenshot of every digital bet slip the second a loss registers. Using this physical folder and digital photo album guarantees that neither a momentary lapse in frustration nor a glitchy app update will destroy your evidence. Now that you have the raw evidence secured, it has to be translated into a mathematical format that the IRS recognizes. This interface shows the exact layout you need to build in your spreadsheet or notebook. Set up exactly 3 columns: the date of the bet, the cost or amount bet, and the payout or outcome. Make it a habit to sit down once a week or at least once a month to log the receipts from your folder and your phone directly into this grid. At the end of every month, run a simple calculation. Tally up the total sum at the bottom of the cost column and do the same for the payout column. If the total cost equals or exceeds your total payouts, you have successfully proven the conditions required to offset up to 90% of your taxes on those winnings. The physical and digital receipts are your raw evidence, but this aggregated spreadsheet is the definitive proof you need to defend your deductions. You now have a complete collection system, a labeled physical folder, an active digital photo album, and an up-to-date ledger. However, do not attempt to manually apply these complex offsets to your tax returns alone. The filing requirements are strict and highly specific. Your responsibility is precise, ongoing data collection. A tax professional's responsibility is applying that data to the actual tax code. This graphic shows where we step in. You can contact TaxLab at 540-701-1988 for a free 15-minute introduction to our advisory services. We are the partners you need to execute this data safely. Bring your finalized ledger and receipts to a TaxLab professional. It is the final step in securing your assets, legally reducing your tax liabilities, and stepping into the role of an ethical millionaire.